Hello, everybody. Welcome to Trading with Livevol. My name is Stefan Choi, and this is where I trade my Reg T account using LVX. So today, so every day I have a little theme. Today I want to just kind of talk to you guys about my current positions and kind of reasoning why I have those on. If you guys, I wasn't able to find time to be on yesterday. But basically, as you guys know, I bought those 100 calls in SPY. And then, let me actually put in SPY here. and then basically the next day, it opened down. And then I got out. But the problem was that I didn't get out right away. Let me actually go to the 15-minute. I basically should have gone out to 5 minutes. So I should have gone out right here as soon as it opened, but then I kind of, oh, right here. So I should have gone out like right here. I would have lost $3 grand, but I ended up going out like right around here. So I ended up losing like $6 grand, which was a bonehead mistake. But also, I think what was bad was, I think in the previous videos, I was telling you guys I needed to be more patient, and basically I wasn't patient because it wasn't an ideal situation and the bet was too large for that situation. And I ended up paying for it just because I think I wasn't doing too well and I wanted to try to catch up. So just, you know, basically I made same kind of mistakes that I've been prone to do. Sometimes it works out, sometimes it doesn't, but essentially I just got my butt kicked here in the last month, right? So I lost about 17,000 total after making about 60, which isn't good. So I'm gonna take it a little easier now. I need to like relax a little bit and really find my spots. Like this morning, I wanted to buy puts right away, just my instincts, because if you look at the market, right, you see, I'm going to go daily. You see how this market, like this candlestick started like selling off where it's not trading below the 7-day and it starts selling off. I look at the VIX. And basically it had this pop, right? But essentially I didn't do it because it would be like my usual trades and I need to like try to get a little more discipline, right? So I'm gonna try to wait for a spot to do it. Maybe it might have like a little rebound tomorrow, but not that much of a rebound. So you see how like there are these days when it has like these like not really big up days, but the market moves quite a bit. Maybe I'm looking for something like that, and then it'll be a continuous sell-off, or it'll just bounce right back up. Like if we finish up today, I would feel very bullish on buying calls, right? Because this candlestick will show me a different story than what it's currently. But other than that, I'll kind of just talk to you guys about some of the stuff. First is Alibaba. So basically, as you guys know, I'm a big fan of Alibaba, and I'm kind of, I made a lot of money trading it originally, and then I lost a ton because I just kept on remaining bullish. If you look at my positions currently, all I have is like some butterflies way out in, you know, so these are like nothing. I put these on because I put the butterflies on for credit, but it's not really my investment. So the way I'm going to invest through Alibaba is through YHOO. And in my previous blogs, video blogs, I've actually shown that the reasoning behind why I want to invest in YHOO, because I think YHOO gives you a little more cushion, right? So if you look at these, I'm out to 2016 January's, because I think there is upside in Alibaba. So I'm not actually concerned if Alibaba goes down. I'm just gonna keep buying calls. So this morning I had another bid in right here, 575. Looks like YHOO is hanging in there even though the market's selling off. And basically I'm just gonna keep buying, right? So I'm just gonna keep buying just because my belief is that Alibaba is gonna have pretty much it's gonna be a major player, and you know, like 3-4 years down the road, people are gonna say like, man, I could have bought Alibaba for $80, right? It's very similar to like Facebook, because there was a lot of hoopla behind it. So if you look at Facebook, you see how like for the first like 1, 2, 3, 4, 5, 6 months, it was basically in pain because people sold off right away. Now Alibaba isn't exactly the same because it did go up originally, but you can see 1, 2, 3, 4, 5, 6. You know, in 6 months, basically it had this exuberance, and then basically now they're going through all these troubles, right? One of the important things that you guys have to know is, I think Alibaba on March 18th. Let me actually check my notes. I should have probably done this before I actually got on the air. But I keep like a book, and I write all these stuff down that I trade so I can actually go back and investigate. I don't think I can find it right now. But suffice to say, sometime in March, they're going to have the shares become unlocked. So the insiders can start selling. But it's going to be in tune of like 450 million shares or something like that, right? So it's gigantic. And then I think in September, oh, here we go. So in March 18th, there's going to be 429 million shares that's going to come out of lockup. I think, you know, for most people, everyone knows what happened with Facebook, GoPro. Like ahead of the lockup period being released, people just sell because now the insiders can now sell 429 million shares. And as you can see, the float in Alibaba isn't even that much, right? And then in September 20th, 2015, a whopping 1.6 billion shares become unlocked. So, you know, every time going into it, usually there is a sell-off, so it makes sense. After the sell-off, after the unlocking period, there might be a little pop, but I'm not really playing for that. I just realized that's what's going to happen. And while the selling is going on, that's when I think I might try to accumulate these calls, these January 40s. And the reason I told you guys I'm buying these is because I think, you know, basically it can go to $47. Like YHOO can go to $47. In September, if it goes to September by then, I might sell because 1.6 billion is going to be unlocked. And then I might try to buy it back. But essentially, like you see, I'm not like betting huge. I'm just buying one lot at a time. I was saying in the previous blogs, I might end up getting 10 of these, but I'll see how it goes. The next one is VOYA. And in my previous blog, I think, yeah, my last blog, I talked about this. And the reason I bought it was because of this guy rolling, and he was correct last time. So I'm just basically piggybacking his trade, even though I have some good knowledge of VOYA Financial. It used to be ING Direct. They had some 2 news today. One was an upgrade, and another one, upgrade in their debt. And then another one was that I guess they're buying rest of their shares from ING Group. Not sure which one of those is making the stock go up. I haven't really dove into it in detail, but basically I have these 20 calls, and what I'm trying to do is try to double. So have this thing go to like maybe 46, 47 bucks by April expiration. So I got pretty, you know, I think I have like 40 some days left. I have 43 days to expiration, so I got some time on those. So I like that one. The other one I have is Twitter. I put this on like, I don't know, I think like 6 months ago. They're gonna expire. So you see how they're the 40, 40, 42, 41, 42. So basically what I did on the 40, 42, I bought these for $1. The stock was trading roughly 42 at the time. So my whole thinking was, if this stock stayed at 42, so if Twitter did not go down but stayed the same or went higher, I would basically double my money. And I did the same thing with 41, 42 for 50 cents. So I like doing these kind of trades on stock that went down. And the reason I did the longer term was because my thinking was there will be, and I did it at this time. So just so you guys know, this wasn't like a winning trade right from the get-go. I put it on right, I think around here, right? Like around sometime around this stage, because it was right around 42, and then it went all the way down to 36. But I knew I had some time, so I didn't really, I wasn't really that concerned. Plus, my limit was locked in there, right? So I was risking $1,500 to make 1,500. So it wasn't that big a position, but I liked it. The reason I liked it was I figured there were like a couple of scenarios. One, basically, they're not going to do anything. They're not going to make any changes, and they're just going to flounder, and the stock is going to keep going down, which means, you know, that's bad, right? The second choice was that there was a lot of rumor about the CEO basically being fired. So I figured if they were fired, if he was fired, just by him being fired and the fact that people don't like him, that the stock will get a bump. So that was number two. Number three was I thought maybe they could turn it around, a lot like Facebook. You know, you get criticized. When you get criticized and you have some pride, you're going to go and work harder and try to disprove people. So, you know, maybe they'll actually disprove and then actually, you know, report better earnings and metrics, which is exactly what they did. And then the last one was kind of speculative, but if they got a bid from somebody. So there was like 4 scenarios. I kind of like 3 out of the 4. And, you know, just in general, I can see the value in Twitter. I'm not sure if it's worth as much as, you know, whatever the market cap is. So I'm not talking in terms of looking at the fundamentals, but you can see the value, right? Everyone Twitters who is of any real importance and they want to get their message out there. It's a way, how do they monetize that? Because it's not like Facebook, in my opinion, where you're kind of like, you're not there to socialize kind of. It's more it's more like instant, like information, like instant news. So if they can figure out a way where, you know, you can get instant news, that might be something where the general population might be interested in. I myself don't Twitter that much, except for the company Twitter and stuff like that. So it's not something I use like readily as a personal, you know, as a personal account, but for business, maybe it's worthwhile. But anyway, this one is expiring in March 20th. And so this thing concerns me a little bit because now it's rolling over and I have 42. I was considering maybe buying these for like 10 cents before, 10 to 15 cents and lock it in, but then that would have taken out, you know, basically I would have had to, you know, lose, I think, what is that? So 22% of my profit would have had to been used to hedge the position, and I didn't want to do it. So this could kind of come back to bite me, but I kind of wanted to keep it. So that's my Twitter. My last one is UUP, which is bullish on the dollar. So this is the one I think might get a pop because it's been basically here for a little bit over a month. The QE is gonna pretty much start in March, according to most professionals, or you know, now analysts, and that's what everyone's expecting, right? So I think the euro is gonna go another round of getting crushed, and everywhere in the whole world is trying to devalue that currency. I think China is kind of starting to could be pretty aggressive. You know, looks like them and Japan have some issues. Not that I'm an expert in it, but essentially all I know is that everyone is devaluing their currency. US is the only one who is keeping the interest rate at a minimum the same, possibly going up by June. So I think there's more upside to the dollar. The question is, when do you get in, right? I think even if you don't get in right now, like normally my tendency is to get in right away, but I'm buying the January, so you can almost like have this thing rally to like 25, in the high 25s, and then go back down to 25. It might be the better time to buy, right? So, you know, this might not be the best time to buy, maybe like around here when it's consolidating, but usually, so I bought some here, but you know, I'm just kind of, I guess I'm not patient. That's the problem. But, well, I don't want to say it's a problem, but sometimes it actually leads to huge trades because I just make the decision because I believe in it and it works out. So the timing is tricky, but as you can see, I bought some more today for 161. I reached for it. I put 10 in there, but I didn't get it. And then I moved the rest down to 160. So I think this has room to go higher. And especially, you know, I talked to you guys about this before in my former video blogs as well, which is I think you can double it if you just hold it, but maybe you can get more than double if you can sell the 27s at a certain point, right? So, you know, if this thing goes up to 26, maybe selling the 27s might work, or maybe at that point selling some of the 24s and kind of locking in the profit. Either way, I'm not really finalizing my strategy. Of course, the percentage return is appealing by selling some calls, but you guys got to remember, if you don't have extra units, you don't have any flexibility in selling. What that means is if you have 13 calls, right? If for whatever reason UUP goes to 26, well, you can just sell half of it out and lock in the profit, right? If you actually short the exact same amount of the 27 calls, you can't do that without actually buying the 27 calls back, right? Without opening yourself up to risk. So, which means like this would have been really inflated, right? So now this has even more premium, and the reason you sold it was because it had a lot of premium. So you're actually buying it back for a higher premium, even though you're locking in the profit. Just intuitively, it just kind of doesn't want to make you want to do it. You know, it's one of those things that that you have to kind of think about. So I think right now, because it's such a long time period, I don't want to commit myself to just selling these, right? So I think I might actually be interested in buying more of these calls. I think I want to buy 20. I think eventually I might be willing to, you know, right now I thought I might be willing to commit about $3,000, but you know, I might actually you know, make it like 7,500 total. So which means like around 50 contracts is where I might want to try to end up. But again, it will depend a lot on how fast it moves up. I think it is actually it could actually have a pop, right? So like it kind of like has this pop and then it consolidates, and then once it actually pops, it doesn't really go back down. It actually gets to the next level, right? So that's kind of what could happen, is that it actually is popping, and then you'll never really see 24 again. It'll just kind of hang out here. If you look at the dollar in long term, this UUP isn't around as long. So I just look at the dollar index. You can see it's kind of starting to break to new highs, and if you look at the monthlies, you can see that during the interest rate hikes in 2000 was when we were kind of starting to go up with President Clinton, and this was the peak right here in 2002, right around there, 2001, 2002, and then dollar's been selling off ever since. But you can see like it was kind of consolidating for about 6 years, and now it had this big move. I actually think the dollar could possibly get back up to here, which means that its move is not really even halfway there yet, total. You know, obviously the question is how fast, because this took years to go down, but it just seems like everything moves faster in the financial world. Like all the banks seems to act together in conjunction, and it's just happening faster. So I can see this, like, you can't use the historical because the world moved at a much slower pace, but I can see this moving a lot faster. So you can actually get to like euro parity, maybe to yen 150, you know, and the Chinese yuan might actually start being really devalued if they want to kind of try to keep up with Japan yen being devalued. So, but these are economic questions. I'm not an economist. I'm more of a trader, right? So I'm making all these things on trading assumptions. So that was a lot of information. You guys might have to kind of rewind and just listen to the parts that you care about, because you might only care about one of the topics. But essentially, as a summary, I made a bad trade in SPY. I use SPY or SPX and VIX charts to basically, they both have to give me the same signal for me to want to, you know, basically make a trade, bullish or bearish. I'm bullish on BABA long term, so I'm buying January YHOO calls. And, you know, like I don't want to say I'm price averaging. I just don't want to just go in and buy everything at once. So I'm buying one at a time. I actually wouldn't feel bad if BABA dropped another 10 bucks, but I'm not sure if that would happen. But if it did, that might be the time for me to like really load up on YHOO. VOYA was a strike that I bought because of order flow information. UUP is the dollar because I'm generally bullish on the dollar. And Twitter, I did a long time ago, and I explained to you guys why. I like the scenario of the stock staying the same or higher, and I put those on. So hope that summarizes what I'm doing. I need to do better trading going forward, because right now it doesn't look like you know, I'm actually on a good streak. So I need to turn it around. Maybe what might be, sometimes what happens is when things like that happen, I just take some time off, right? So I just kind of like, I'm like in some kind of bad like streak. So the best thing is like not to keep betting, but just to take some time off. But that could change, like literally after this video, I can go back and see something and I'll put it on. So that's not always, you know, consistent either. But anyway, hope you guys are trading well. The market looks like it's kind of rolling over. So good luck to you guys. Make sure you guys have some puts, or you know, trim your bullish positions. Either way, like when I look at this chart, it looks bearish, right? And the VIX looks bullish, which is kind of like a combination of the market dropping. Okay, so take care, and I will talk to you guys tomorrow.